everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's do a quick systems check. If you would, just type OK in the question box there if you're hearing me clearly and seeing my screen all right. Okay, looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to bring profits. So you want to manage risk in a way that makes sense for you. And we'll go through some ideas in that regard using some tools that make it pretty simple to understand what you're risking, what your potential profits are. And these tools are built right into our web trader. So we'll go over those as we come across maybe some potential trade simulations to run through. And also keep in mind that what we go over is coming from an educational perspective and not to be taken as financial advisement. Real quick, as we're getting started before we get on the live charts, for anyone who might be new to things, what is technical analysis? Basically, it's looking back at the past price movements, trying to find some sort of pattern that maybe lends some predictability to future movements. And those patterns that we're looking at could be maybe important price levels that many times we refer to as support and resistance. Could be movements such as ranging patterns, breakthrough movements, different patterns that we can recognize as we look back. And there are literally hundreds of different formations that technical traders look for. And we'll go through some key formations and patterns that maybe we see today on the charts that might help us indicate where we might prefer to get into trades, out of trades, what we might expect to happen moving forward, potentially based on the past, etc. And sometimes beyond the manual methods of technical analysis that we draw our own lines on the charts to kind of outline these patterns that we find, you also can use indicators, which can also assist you with recognizing spots that maybe are opportunistic for entering into trades or getting out of trades, etc. And as we go along, if you have questions, if you want to give input, feel free to do so in the question box there. And we'll start out here on the main website. To trade on the web trader, you log in from the upper right corner here. And what's nice about our web trader and our app, which have the same functionalities and features, is that you can trade on your MT4 accounts and your MT5 accounts from the same location. And so you don't have to switch platforms between MetaTrader 4, MetaTrader 5, etc. You can kind of do everything from one place. And the AvaTrade Go mobile app, which, like I said, has the same functionalities as our web trader, are found under the trading platform section and AvaTrade Go. So you just click on that and it takes you to the links to the major app stores for the AvaTrade Go mobile app. Now, if we log in here in the upper right corner, we find ourselves in the web trader. And before we get started on the technical analysis, we should kind of talk a little bit about what's happening fundamentally right now. And basically, there's some fear leading into tomorrow about the CPI data coming out of the US. And there's also some fear about what's happening in the Middle East with Israel and Hamas with the fighting that's going on in the Gaza Strip, and then also how that could potentially spread to a conflict with Iran and a larger regional war situation. And so there's some fears there about maybe supply disruptions for crude oil and the instability that could lead to on the greater markets. And so we saw for a couple different reasons then, some fear hit the markets today. And so keeping that in mind, as we then move forward with our technical analysis, kind of gives you an idea of maybe a direction you might prefer on some different instruments as we look for entry points and exit points with our technical analysis. And the CPI data that comes out tomorrow out of the US, really what the focus is on the interest rate situation out of the U.S. Is inflation coming down yet or not? And we can go to the economic calendar real quick. I know it's a technical analysis webinar, but if we quickly take a look at tomorrow on the economic calendar, and we go to the U.S. announcements, then we can find the CPI data is coming out here. It's the core inflation rate data, and the expectation is year over year that the inflation actually will be up from the last month. That is not the direction that the monetary folks, those making monetary decisions in the U.S., the FOMC committee, that's not what they expected to see at this time. When they first started raising interest rates year and a half ago to try and bring inflation down, and 9, 10 different interest rate hikes, and they've yet to lower any of that back down. They expected inflation to head towards 2% or so. And yes, it was at 10% plus, and it has come down, but boy, it's become sticky and resistant to dropping any further. And we see the expectation is a rise on year over year inflation rate from 3.2 to 3.4 out of the US. That's already bad news, kind of built into the expectation that it's not dropping to, maybe 2.8 or 2.7, but ticking up year over year is the expectation. And if that comes in higher than that, you could see more fear hit the markets, that inflation just is not under control and that interest rates won't be able to come down anytime soon. Now, the opposite could happen. If interest rates come in significantly below this 3.4 expectation, you could see a sigh of relief on the markets and maybe a weakening of the US dollar potentially if the expectation is that maybe interest rates could come down sooner rather than later if this number came in significantly lower than expected. So two polar opposite reactions could happen based on how these numbers come in. And we could also look at the core inflation rate rather than just the plain inflation rate. Core inflation rate factors out energy. If we look here, excludes volatile things like food and energy, food and fuel costs. If you factor those out, inflation is actually expected to tick down slightly, but not much, even when factoring those out. So again, not great news. And if this comes in as expected or higher, we could see a continuation of some of the fear that kicked in today regarding this announcement. Okay, so very big announcement tomorrow to keep an eye on the fundamental side of things. Now, let's take a look at something like the Euro USD. And let's see, first of all, is there a technical signal? Since we're wanting to do technical analysis, we can see there is a technical signal. That's what this symbol means. There's a live signal. So if we click on that, we can see that it is a buy recommendation after quite a bit of dropping with the USD pulling the euro down. So we're just above a support level here. And the signal is to buy with a take profit up around 108.90, 10 to 109, basically, maybe a hair above that. That's the take profit zone up here on this signal. And so the question is, do you think that the fundamentals support that directionality? And right now it's maybe kind of a wash in terms of the fundamentals and the signal maybe opposing each other here, because if there's fear about that CPI data being high tomorrow, that serves to strengthen the USD. And the signal here shows a nice technical support for this maybe to bounce off of if the USD weakens. So those two things don't necessarily work with each other in terms of the fundamentals and the technicals. Now, if I want to switch this to, let's say, 1 hour candles, we can take a look and see that take profit zone was up here. Let me delete maybe some of these lines. Okay, they were suggesting a take profit up above this line here. Okay, up near this resistance basically is where they're saying to take profit in that signal. So technically speaking, there's a support level here. It found support on the 1 hour candles, temporarily anyways, trying to bounce, but you can see it's having trouble really having a significant bounce at this point. And I think part of the reasoning there is the fundamentals are working against the euro climbing right now against the USD. But it's not much of a risk if you go with this signal. You've got a support level here to put your stop loss just below it. Take profit before the resistance up here. You know, since that data has not come in yet, right? The CPI data is tomorrow. Perhaps some of this fear subsides for a little while until the actual announcement comes tomorrow. And that could help this maybe to bounce back up rather than break the support level. But you know, I tend to try and align my fundamentals with my technicals. And right now, I think the fundamentals are working against this signal. Although it's a beautiful setup, technically speaking, right above the support level, opportunistic spot if you wanted to buy. I feel like this is trying to break that support level. And in which case, if it did, the new signal would be to sell if it breaks below the pivot line in that signal. Okay, so this is one I think I would pass on because you can see it's still trying to downtrend and the fundamentals tell me to sell here. Okay, so that technical signal I would take a pass. Let's take a look at gold. Okay, gold is interesting because even with the USD potentially strengthening, gold is still a safe haven that many might run to. And gold can actually still rise against the USD while the USD is pulling the euro down and the stock market down, etc. You still can see gold climb. And so gold being a safe haven, let's see what the signal is here. It's a sell. And we're looking at the take profit levels down around 23.33, 23.18. Okay. Again, I think the fundamentals are a little mixed up here because you know the USD could strengthen with the fear, and it seems to be strengthening a bit now against other currencies. But fear also is a reason for gold to go up, even if it's against the USD. And so the fundamentals, I think, kind of cancel each other out. And so the technicals then, I think I would take a look at here and see where does it set up. And it looks like gold, with this signal to sell on gold, it already dropped from the pivot line almost all the way to the first take profit. If you look here, this was the first take profit suggestion in the gold sell signal, and it almost reached already. You see here, it almost reached the take profit, and now it's starting to climb back up. So this, to me, is a movement that already went in the correct direction for the signal, which was sell. It almost reached the take profit, and now it's just above the support level, which is the take profit line. Okay, so technically, I think this looks like something that already carried out on the sell signal, and looks like it could be something that wants to climb due to the fear maybe that's on the markets right now. Okay, it was only earlier today that gold was at 23.70 or so. Okay, 23.64 just a few hours ago. All right, and we've got a support level here. We see once it broke above this price, this price level, it wiggled above and below and then found support here and then stayed above that. And it hit again on that same price where we have support, 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 and up. It hit that price and bounced immediately. Okay, that's a type of bounce that we didn't see on that other chart that we looked at. Okay, and so if I was going to make a technical move here, I think the fundamentals are in the direction of people are running the safe havens right now, maybe. Okay, so this one seems to be in alignment to go the opposite direction of the sell signal, but the sell signal already almost carried out correctly. It almost hit the take profit, and it looks like now it's trying to bounce the other way. From a technical perspective, it's bouncing off this support level. So if I'm going to do a technical strategy here, I'm going to buy because it's bouncing off the support. And the bonus is that there's fear out there about the CPI data tomorrow, and that might help strengthen a safe haven like gold. Okay? And so that's kind of how you put together a trading strategy where you're looking not just at the technicals, but then also factoring in, do I feel like the fundamentals are leaning in my favor? And if you do feel that way, then maybe you make the move. And I'm not saying you have to feel that way about this particular simulation. But if you feel like as a safe haven, gold has reason to climb right now because of the global fears about war, about inflation, then maybe this is a move that makes sense technically and fundamentally in your mind. So my take profit would be somewhere up here at today's high or just before it. So 2364 maybe, 2363. Maybe I'll do 2363 and a half. Okay, stop loss just needs to be below today's low down here, below this support level. So 2336 maybe. Okay, so my potential profits, more than double what I'm risking. Now I just need to adjust my trade size to be the amount that I'm comfortable risking. I've got my stop loss down here below the support, okay, 2336. I've got my take profit up here before the resistance, okay? And so now I'm just adjusting my trade size to be the amount of risk and potential profit that I want to put into this trade. So with one lot, I'm risking 836 to go after almost 2,000. Maybe I do 0.7. Now I'm risking about 1% of my balance, a little less, to make better than 2% potential profit on my balance. So if I'm comfortable with that risk reward, then I buy, okay? So I'm in the direction that the momentum seems to be carrying. It bounced off the support level with a nice bounce, respecting this support level from back here, okay? And it's in the direction where I have larger potential profit before it reaches resistance compared to the risk that I have to get below the support level. So it's technically an opportunistic entry point. And at a time where it's bouncing off the support level, and in the direction that maybe we believe the fundamentals will help carry it. So that's how you start to put together a trading strategy with your technical analysis to try and be in the direction that you believe the wind is blowing, so to speak, to have an opportunistic entry point from a technical perspective, and to have confirmation of important price levels maybe holding. In this case, this support level from back here held again with a nice bounce. Okay, and so we'll see how this carries out. Obviously, it's early on in the trade, just getting moving, and you can check back in this area to see how your trade is carrying it. And one thing that's nice about this platform is, you know, if we go to the chart and we start to look at your open trade, you can see your entry price, you can see your take profit line, and you see the little hand shows up. So I can adjust that at any time. If I left click, I can drag my take profit up or down to whatever spot that I want it, okay? And it'll adjust immediately. Same with the stop loss. I can move that to wherever I want to have that, and it adjusts automatically with a click and drag. Very simple to do, okay? Maybe this gets up at some level of profit, and you decide to slide your stop loss up to your entry price so that you have, you know, no risk anymore on the trade and only profit potential, that sort of thing. So it's very easy to move these around. I have someone saying they're having some trouble with their audio. On my side, it looks like it's all good. If anyone else is having issues, just let me know, okay? All right, so let me move on maybe to another instrument. We'll go to the trade area. And maybe we'll look at a major indice. I know the NASDAQ out of the US was moving around quite a bit. On the 1 hour candles, we can see that kind of choppy movement where we had a rise earlier in the day, a big drop off, a bounce back up. And here we find ourselves right in the middle of this movement. Okay. And this is related to exactly what we talked about at the opening of the webinar, that there's big CPI data coming tomorrow. There's fear about what's going on in the Middle East, not to mention the Russia-Ukraine situation still going on. So plenty of reason for nervousness about inflation, about war. And so I think leading up to the CPI data, this movement might range between these highs that it hit today and the prior day, and this low that it hit earlier today. Okay, and we're dead smack in the middle of that. The resistance up here, the support down here, and I think we'll have movement between these two levels leading up as we get closer to the CPI data tomorrow. You know, if there's big breaking news of some kind tonight, this evening, then obviously this could have momentum to break above the resistance or below the support. But barring any new breaking headlines that are major, I think we'll see this respect these two price levels somewhere between here as we head towards the CPI data tomorrow. So for me, this doesn't feel like an opportunistic entry point to make a move here, because we're halfway between the high of the day and the low of the day. If we were somewhere near this resistance, you could think about shorting it. If you think the resistance will hold, you could put a pending order up here maybe to sell. And same thing, if we get near this support level here where it bounced off of, you could have a pending here maybe to buy if you think these price levels will hold. Okay, currently we're right, like I said, between the most recent resistance and support levels, so it doesn't feel like an opportunistic spot to try and make a move from on that particular instrument. Now we also could look at the UK 100. And we see a similar situation where we've got resistance up here from the high of the day and support down here from the low of the day. And we're right smack in the middle of those two prices. Get rid of this line here. And so, again, it doesn't feel opportunistic yet, entry point wise. If you feel this is an uptrend that will carry, then by all means, you can make that move towards this resistance, and this might be a spot where you'd think to take profit, okay, towards that resistance level. Now, some other places we could look for some information. If we go over here to these tools and we go to the market buzz, we can start to look at some different instruments more specifically, like Tesla, NVIDIA, Apple, and just see, well, what's going on with particular stocks or from other instrument classes as well. And you see Apple, it says the price is expected to rise 8.8%. If you want to see the trend analysis, here it is. Okay, we've got technical analysis. Here's the signal. It's expected to rise towards these levels. You've got this the pivot line drawn here, the blue line, so you could get your stop loss below there if you wanted to buy with this trend analysis, okay? And you can read the articles. This isn't a fundamental analysis webinar, but you could read the most recent articles about Apple that have come out and see if that also supports the idea to buy with this trend analysis. So you've got a lot of information you can find here on different instruments with the trend analysis there, with the technical analysis outlined for you. And you can look in commodities, indices, etc., for the same idea. You know, we can look at natural gas, the trend analysis. They don't have the trend analysis outlined for natural gas. Okay, not everything has the technicals. So you can take a look and see what's available on different instruments. Here's gold. Okay, the latest articles, and you can look to see what percent of people are buying, what percent of people are selling, etc. Okay? Any questions, comments before we wrap things up this evening? Okay, great. Everything must have been clear. Yeah, sure. We can look at one more instrument. Crude oil. Okay, let's look at crude oil. And so as we look at crude oil, there is a signal. It's to sell. Okay. USD's been strengthening some, like I said today, and it looks like it's been able to pull crude oil down. But the wild card here with crude oil, remember what we said at the opening, there are some fears of potential supply disruptions. Iran just threatened to close down one of the key straits where shipping goes through if things don't improve in terms of the situation here in the global fear environment that we're having about war maybe expanding in the Middle East, and maybe Iran could be included in that. And so as we sit with this type of situation here for us all to consider, then we have to understand that with one headline, crude oil could go the opposite direction than what we're seeing here. Okay, and so if we look at one-day candles, we could see there's been a strong uptrend on crude oil, and this is really a small pullback when we look at one-day candles compared to all the climbing that has occurred. So already crude oil was going up. There's been a pullback here. Let's get rid of some of these old lines. And so with this pullback, if you believe these global fears about potential expansion of war in the Middle East could occur, and that there could be disruptions of crude oil supply lines, etc., then this could be an opportunistic spot to grab a price to buy from. Okay, right now it's a strengthening USD pulling crude oil down, and you could trade with that. You could sell on this downtrend. Okay, on the 15-minute candles, that's a strong downtrend. Okay, it hasn't ended yet. So even if you were selling here, you still could do a strategic pending order to say, if this starts to uptrend with some type of news, then you could have a pending order waiting to get in. All right, so the fact that it's a sell signal and the USD is strengthening, okay, fine. You don't have to buy with that downtrend. But you could say, if this breaks back above, say, this old support level, support, and here it broke through that support today, if this breakthrough reverses itself back above this broken support and comes back up this direction, you could have a pending order somewhere above this support level that if it hits, say, 85.6, 85.8, somewhere up in this area, maybe that convinces you that there's a reversal and that crude oil could climb. Okay. Right now, though, we have a technical downtrend on crude oil, and it's hard to buy in a strong downtrend. But you could look to see if at some point this reverses. If you were looking to buy on crude oil, you could have pending order above a price level that you think is key, that if it breaks above that price, then in your mind, that could be an uptrend that maybe you want to buy on. Okay. Definitely a tricky situation with crude oil with the war situation. So it's something I would be careful with trade size, exposure amounts, and entry points. Okay. All right, everybody. I think this is a good spot to stop. Thank you for joining, and good luck with your trading the rest of the evening and the rest of the week. Bye for now.